So you want to make sure you have the proper insurance, because if you notice here, the insurance coverage, you can also include property management just in case. Like I have some agents that do that, and also believe it or not, modifications can be covered under the this. You never know when you have a deal and they say, okay, I don't want to do a short sale, I want to just modify. You say, okay, I'm going to be a nice person, I'm going to help you out. What happens if they lose the house? Who takes the risk? Okay, Coldwell Banker though is self-insured, so they don't have a policy. They basically have a giant fund that they pay from. I don't know. I'd rather have insurance just to be safe. So let's talk about the test and the licensing and so forth. So the first thing is a lot of you just say, well, Rich, this is a great training, but doing loans and real estate is illegal. Who here thinks that? Anybody? Sorry, we just did our website again.
What did you say? Doing loans?
They say doing loans and real estate is illegal.
Illegal?
Yeah.
Illegal. Real estate?
Illegal.
If you are licensed to do it, why should it be illegal?
If you're licensed to do loans, it's still illegal?
The answer is no, it's not. So what the DRE, on the DRE website, there's something called MLO, stands for Mortgage Loan Originator. The license attaches to your DRE license, okay? A lot of brokers will say, okay, well, it's illegal because they don't have the license. But my agents that do loans or are hybrid, they can do both real estate and loans. You'll see that they also have an NMLS endorsement as well. All right. Now, in terms of the the status, you can click the button to check the status. Okay, and then this is a public site as well. So if there's any disciplinary action, just like the DRE, the customer can see that. So you'll see right here, this is our legal name. This is our location here. You can see everything that associated with the company. You can see the license details. So this is basically the process. Now, before, when the class people, students would say, hey Rich, can you help us with with this process? Because this is very time consuming. We would do it for free, but we decided to just charge a small, like, I don't know, $50 fee or something. So if you need help with this process, we'll help you. It is very tedious, but it's very time consuming for us as well. And so what NMLS does is NMLS is the organization that you're basically going to pass the test with. Okay, they regulate the loan part of it. Okay, you can also look up banks and loan agents for banks on this site here. So it basically tells you the status, whether they're approved or not, and even if you look up people individually. So let's say Rich Kwok. You can also see the details and the prior history, okay, and even their job history, depending on if it's disclosed. I think it says unemployed in 2001. So you get to see everything basically. I used to work for Alpha, Century 21. So that's basically the whole idea of NMLS, is it creates a central database. Now I want you to write down this website, NMLS mortgage.nationwidelicensingsystem.org. Okay, you can also search on Google for NMLS and you'll get it. First shot. Okay, so just search on Google for NMLS, and it's the first site right here. Okay, the reason this is important is this is your first step. Okay, this is where you're going to register and say I want to get a loan license, and this is where you're going to create an account and do your 20 hours of education. Now under state licensing, you're going to click on state licensing. Then you're going to see California. Click on California. And this is the requirements here. There's 2 bureaus that regulate it. This used to be called the Department of Corporations. Okay, this is where you didn't have a Department of Real Estate license, or Bureau of Real Estate license. You can get licensed under the Department of Business Oversight. This is how the banks like Bank of America are licensed. They're licensed under this. So on the test, it's important to understand that in California, there's 2 government entities that regulate licensees. Okay, NMLS for the loan license, but you can be under the Department of Business Oversight, which was formerly called the Department of Corporations, or the Bureau of Real Estate, which was formerly called the Department of Real Estate. Okay, So for us as licensees, we have what we call an endorsement that attaches to license that says, hey, it's okay, I'm licensed to do loans. And that license, as you saw earlier, links to the NMLS. To answer the question though, is it illegal to do loans and real estate? The answer is no. The exception is FHA. FHA requires you to have another person on the loan originator, different from the realtor. Conventional doesn't care. So a lot of times if I have a coworker, I'll just have them do the loan, basically, and work out a split or whatever. Okay. So again, for FHA, they do care about who's who. Same brokerage can operate, no problem. All right. Conventional, don't care. So essentially, these are the two ways to get licensed here. Okay. Any questions on this? Now, yeah, question?
So we're the second one, right?
We are the second one, But on the test, at least, and also for the state, you'll need to know the difference between these two. In a nutshell, it's this. California Bureau of Real Estate, okay, this is how you get paid 1099. If you're under the Department of Corporations, which is now called the Business Oversight, you get paid W-2, okay? An employee that works for Bank of America will get paid a W-2. Does it make sense? Now on the test, there's a question. Relationship between the broker and the salesperson. Is it an independent contractor relationship or is it an employment relationship? Remember that question?
Independent.
Okay. The answer is actually employer relationship, but the method of payment is independent contractor. That means that I am responsible as an employer for all the agents in the field. All right? Does that make sense? I have the employer-employee relationship, but for payment-wise, 1099. All right?
Wait, is that in the real estate questions or is it for in loan questions? Just now the question.
That question is it's probably going to be on a state test.
Yeah.
It's what type of relationship does a broker have with a salesperson?
Yeah.
And you might be tempted, independent contractor.
Yeah.
But no, it's actually an
It's
employer-employee.
employer.
Okay? I, a broker, am responsible for the results, okay? As opposed to like a vendor, like Aki, videoing, right? My relationship is more of a independent contractor.
But may I ask you?
Mhm.
But can we individually get our own E&O coverage? Or it has to be through the broker?
So the E&O coverage,
Yeah.
the broker, the whole reason I have like 4 broker associates actually that are in my office, but the whole reason they join is because number 1, the brand, and number 2, because of the E&O. So it wouldn't make sense for you to pay the money that we pay. It's a couple grand a year, so it wouldn't make sense for you to pay for it yourself unless you were worried. Does that answer your question? Because when you join a brokerage, your broker should have the E&O insurance. That's the whole reason you're joining a
But
brokerage.
it's gonna be less through the broker, right?
No,
Is
I
it-
mean,
or it's still the same price,
But
still the same amount.
our E&O insurance each time we make a transaction.
oh
So that's why I'm asking,
Oh.
can we get our own E&O?
well, the broker has a policy, and if it costs us, let's say, X amount per year, just divide it by the number of agents and the transactions. That's how we do it.
You divide it per agent, per transaction or what?
Yeah, we do per transaction.
Per transaction?
Yeah.
Oh.
So, yeah, you want to make sure that your broker has insurance.
Yeah.
That's not required for the MLS, but we're just talking about something different. The other thing too that you want to maybe be aware of too is make sure that your broker is incorporated. There's this new law that's coming. For example, we are a corporation license right here. A lot of brokers are just a sole proprietor license. So there's a new law that's coming. I forgot what it's called, where, for example, they would have to have their Social Security provided upon close of escrow to ensure that taxes are paid. And I know a lot of brokers, especially small ones, might have a problem with that. See, my social's not on here. This is the company's social, so to speak. Okay. So, but anyway, that's a separate topic. So, going back to the loans, we covered that. Now, the requirements are here. So, common requirements, state license requirements, and common requirements. So, what we're going to do is we're going to navigate here. This is mainly for the state stuff. So, we're going to. Okay. All right. So, on the state test is these verbiage here. ME4 filing, ME2 filing. Okay. So, ME4 is basically the form that you register with NMLS to create an account. Okay, so it's a quick guide here. So it's kind of silly because they ask you questions about the organization and how to get your loan license. So that's why you want to basically explore the site as much as you can. ME2 is your individual form. So this is a quick guide on how to create the individual. I mean, it's pretty simple. There's always also a call center here. But if you need help with that, my admin can help you for, $50 or something. Just like the DRE, there is also a concept of change of employers. So company relationships with loan officer relationships, same thing. Okay. So you're going to basically look at what's called an ME4 form if you need to change that relationship. And the last thing I want to show you is the coursework that's required. Where are you? Professional standards. Okay, education. Alright, so right here.
Educational requirement?
Yeah. I don't know why they hid it so much because it used to be easier. Basically, for this requirement, this is good. For this requirement, there is federal law regulations, and as you can tell earlier, we covered a lot of the regulations. There is the comprehensive, and there is the core courses. 3 hours of federal law, 3 hours of ethics, and 2 hours of non-traditional mortgage lending. Alright? And then there's electives. Courses that are intended to satisfy any of the optional requirements. So, on the test, when you take the test, and hopefully you pass, if you don't pass, you can get a breakdown of the parts that you missed. Okay? So you know what to focus on. It'll say, okay, you didn't do so well with regulations, or you didn't do so well with practice. Okay? But the pre-licensure courses, the 20 hours, come from this. It used to be very simple, but now it's more complicated. So the pre-licensure education course. Okay? Continuing education is pretty simple. Basically, you have to take these courses here. A lot of online providers, I basically get my renewal for $80. Let's see here. Depending on, most of the time, this is what the requirements are. 3 plus 3 plus 2 plus 12. So that's 20 hours total. This is a breakdown. 3 hours of federal law, 3 hours of ethics, 2 hours of training related to standards, 12 hours of mortgage origination. Okay? Continuing education, however, only requires 8 hours. 3 hours of federal law, 2 hours of ethics, 2 hours of training, 1 hour. I can basically do this in a nighttime. Just go online, click, 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 and then done. Okay? So
What is the 2 hours of training related? Do you have to do like training in mortgage?
It's basically, in terms of the renewal, it's basically click, 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 go through an online course. Click, 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 quick quiz, open book, very, very easy. Okay? The hardest part is this 20 hours. Okay? But again, hopefully that will inspire you. 161,000, but again, that's just me part-time. Okay? So is it worth it? Possibly, yeah. There are providers. We also have providers that we use, but there's a provider list of courses, so you'll be able to access some NMLS approved providers on the site and be able to shop it. Okay? So any questions on that?
The ethics, are they similar to the real estate ethics?
They're different. I mean, I don't remember the ethics, but these are things that are, think of it as tricky ethics. Tricky ethics. Ethics that you might think is right. And we're going to go over some of those questions as well too. Okay? So then correct me if I'm wrong, but there's 150 questions, or 120 now?
I have 125.
125 questions. 10 of the questions are throwaway. Unlike the DRE, you actually need to have 75% to pass. Okay, DRE is 70%.
Oh, 70%.
Yeah. So the first time I failed, I missed one question. But
69.
Mhm.
Where did you get that book?
75% here for NMLS or 70?
75% for NMLS. I got my insurance license. Insurance is easier, 60%. But broker is harder. So this book is Pro Schools. It's just one of the 20-hour courses that I have as a reference. But it's not necessarily what's on the test. This is just kind of help refresh the basic regulation knowledge. Okay? Let me see if there's anything else they need to know. Oh, that's right. The Department of, so for the state test, go to the Department of Real Estate website, okay, or Bureau of Real Estate. Okay, what you need to know on here is stuff relating to licenses, because obviously the loan license is an endorsement to your real estate license. So what you want to do is you want to look under e-licensing. Sorry, not under e-licensing. You want to look under the, excuse me, the fees. Where you at, fees? So regular sources. Renewal. Okay, right there. So
if you pass the test and you're a broker, do they combine the fees? Like you have a broker's fee and at the same time you got the loan?
nope. Remember that these are two different entities, both competing.
So you paid separate. You pay separately.
You pay separately, yeah. The NMLS will cost you about $300 to get it. Every time you fail, it's $90. Okay. So make sure. So the whole idea is, I'll give you some tricks. But if you feel like you're gonna fail, my suggestion is go back, memorize the questions, and then do a brain dump. Okay, brain dump is like recording. Okay, I remember question number 1. It was this, you know, that type of thing. So what the state test asks is renewal. What's the cost? When should you renew? When do you have to renew? If a broker were to move, how long does he have to change the address with the BRE? Okay, those type of procedural questions. So my suggestion is go through the Bureau of Real Estate site and look at some of those stuff, including fees. Fees are on there. See, original examination fee, $60, renewal fee, etc. So
altogether we have to pay.
well, we're not talking about the paying, we're talking about test questions. So there's questions on the state test that have to do with fees.
Yeah.
All right, which is kind of silly because you don't think, oh gosh, you know what, I don't even remember. So my suggestion to you is if you are taking the state test, go to the Bureau of Real Estate website, play around a little bit, look at the forms. What do I need to form for renewal? When do I have to change my license? If I move, things like that. Procedural questions. Okay.
So these are in the test.
These are on the test, yeah.
Oh.
So the test asks questions about NMLS, which is funny because it's an NMLS test. Right? They ask questions about what courses are required, how many hours, you know, things that you should know. It's kind of silly to me, but that's the way it is. Let's see. I think that's pretty much it for that. Let's go over the actual questions. These are actual questions on the test. If a borrower had an outstanding balance as of April 1st, $549,287 with the monthly payments of $4,020, interest rate of 5.75, what's the balance in May? That's in the month afterwards. And you say, Rich?
Had an outstanding loan.
Now remember, in the test, you'll be receiving a scratch paper and a regular calculator, not a mortgage calculator. So the only questions they can ask math-wise are simple math questions.
Are we gonna bring a calculator?
You're not going to bring anything.
Yes.
Whatever you bring, they're going to lock up in a room.
No, but there is like
You can bring it, but they're going to
Selection.
lock it in a locker.
to select from.
Yeah, you're going to have multiple choice questions.
Selection.
And the multiple choice questions, there's A, B, C, D. There is skip, and there's M for mark for a review. So if you're not quite sure, I always hit the M button, mark for review, and then come back later. Because chances are that a future question might ask the same thing, and I might ring a bell. Going back to the question here, it's a really simple question. Okay, the monthly payment is $4,020. Interest rate is 5.75. Now we can do some basic math here.
The payment we apply minus the interest for that that month, right?
Yep. So here's what we have to do. We have to take the
The percentage.
let's take the percentage. Okay. So let's take a 549, 287.
287
Times
5.75%.
Very good. And then what? Divided by
Equals divided by 12 months.
12 months. So every month, 2632 is going towards what? Principal or interest?
It's a
Are you sure?
no interest.
Interest.
I'm sorry,
Interest.
yeah, interest. Yeah.
Mm-hmm. So therefore, just calculate how much is going to principal.
4020 minus 2632 equals.
1387.
That's gonna be added to the loan balance.
Add it to the 549 balance, and we get 547,899. Okay. So what did I do first? I calculated what the interest was. I took the loan times the interest rate, 549,287 times 0.0575, divided by 12.
By 12.
That gives me the monthly interest amount. And then I know the payment is 4,020. So if I subtract that, the difference is going towards principal, minus 4020. That's 1387 is going to principal. And I subtract this from the balance because the balance is going to go down. Okay, 549,287. Now, here's a tip on the math questions. If you basically work backwards too, you might be able to get the answer. If they give you option A, 560, option B, 547, option C, you can plug those numbers in backwards and get the right answer. All right? So the other questions that you'll see are proration questions. Let's say insurance costs $1,000. I'm sorry, let's make it easy. Insurance per year costs $1,200. Borrower sells the house in April. How much insurance refund do they get?
They get like.
End of April. End of April. I guess
April.
January, February, March,
Then
April.
they're gonna have like 8 months.
3 months.
8 months credit.
So you take 8 divided by 12 times the 1,200, right? So it's $100 a month. That equals $800 refund. Okay. So you're gonna get simple questions like that. Okay. So basic algebra. Now, if a lender refuses to lend in a certain neighborhood, what is that called? This was also on the DRE
Is that
test.
steering?
What is steering?
No,
It's
red
red
line.
line.
Or red line.
I think red line.
You just somebody drawing a red line saying, I'm not going to lend in East San Jose or whatever. Okay? Steering is where you're pushing the borrower. Hey, you gotta really use rich, otherwise I'm not gonna do your deal. Predatory lending. What is that? Taking advantage of the client, overcharging them. That's called predatory lending. Okay. What is the feature of an ARM? What's an ARM stand for?
Adjustable rate mortgage.
Adjustable rate mortgage. One of the features is that it can adjust anytime.
Up and down.
Okay. So the feature may be a good thing or may be a bad thing. Okay. It's asking what is the feature. Now there's actually D questions, but the monthly payment is not constant because this is adjusting. Loan amount never increases. That's not true. Now here's a challenging question. What are the Fannie and Freddie Mac rules regarding an owner-occupied purchase of a fourplex? Fourplex. What are the Fannie Mae rules?
1 unit should be occupied.
Um,
1 unit should be owner occupied.
Well, obviously, because it's an owner-occupied purchase, right? So they have to live in the property. Actually, the answer is the rents must be greater than the mortgage payment. Yes. So it's called, it's a special rule. It's called self-sufficiency rule. You can Google that. Self-sufficiency rule. That means that if the lender were to foreclose, they want to make sure that the rents cover the mortgage payment. That basically controls the down payment. So in real life, my buddy bought a fourplex. He's going to live in there in Santa Clara County. He's putting down 15%, 1.5. Okay? There's no requirement to put down 20%. In fact, duplex you can go FHA 3.5% down if you want. The 6 months reserve right here, this is actually required for investment properties. Okay? Owner occupied, if it's FHA, no requirements, no reserve requirements. But for investment property, 6 months reserves. The DTI 45 here, this is the guideline for investment property as well. Okay? In real life, it can go a little bit higher, but that's it. Now here's an example of a trick question.
Red flag.
What is a red flag in an owner-occupied refinance loan? Okay, so pretend you're not seeing A. Is it that the borrower resides in a home in the same neighborhood? Is it the borrower owns another home in the same neighborhood? Is it the borrower owns a second home within 50 miles of the home they're purchasing? Is it the borrower lives with their parents in the subject property? Let's go through it one by one. Is it okay if the borrower to have their in-laws or their parents live with them? Is it okay?
Yeah.
Absolutely. Is it okay for them to own a second home somewhere else?
Yeah.
Yeah.
Yeah. Is it okay for the borrower to own another home in the same neighborhood?
Yes,
Yeah, why not? Is it okay that they reside in a home in the same neighborhood as the subject property?
in the same neighborhood.
And that
They
property's
res-
not owner occupied anymore.
Exactly. It's a trick question. Because they're not residing in the subject property, they're residing in a home in the same
In
neighborhood.
the same neighborhood.
Okay? So that's a red flag because this is supposed to be an owner-occupied loan. This was an actual question.
So that
Okay.
is an A?
Yeah.
The answer is A because they don't live in the property. They live in the home nearby. Does that make sense? So that's an example of the tricky. Okay,
That's
this
tricky.
this one is basically memorization. Remember, you remembered Zilla, Regulation Z. The other name for TILA is Consumer Credit Protection Act. So that's basically it. Think of it this way. Remember we asked, what does this act apply to? Credit cards, loans. It applies to everything. Remember that? Anything had to do with credit. So it's called Consumer Credit Protection Act. CCPA. Okay, so Zilla equals CCPA. All right, this one we didn't cover, but when is appraisal disclosure required to be delivered? So what's an appraisal disclosure?
3 days after the application.
So disclosure is the borrower's right to get a copy of the appraisal. How many days?
3 days.
No. How many days do they get a copy of the appraisal?
90 days.
90 days. Okay, so they are advised of this right in a paper form. This paper form is called the appraisal disclosures. When do you give this paper to them?
3 days.
3 days after the application. Okay. How soon after notice of adverse action must an appraisal be provided?
How soon after notice of
30 days.
How soon after notice of adverse action must be appraised? 30 days.
30 days. What percentage of variance on Fannie Mae appraisal report is tolerable when dealing with comps? Okay. Now this is a complicated question. To get this answer, you have to actually Google Fannie Mae guidelines. This one says that you got subject property, comp 1, comp 2, comp 3. How much adjustment can I make to comp 1? If I make too many adjustments, do you agree that it's not a good comparable? You got a property here, let's say it's a 2,000 square foot house. You got your comp 1 is a condo, a 1,000 square foot condo. You make lots of adjustments, that's too much. This is a bad comparable.
Yes.
So this is memorization. The answer is 15% tolerance for $25,000. Okay.
I saw on the website, it
15%,
answers
15,
20%.
20.
It's possible that it could be changed. So my suggestion is to Google Fannie Mae guidelines, and you'll see it. It might be 2050. At the time that this was written, it was 1525.
So suppose 20?
Yeah, my suggestion is to Google Fannie Mae guidelines, and you look for the appraisal tolerance.
Okay.
So 15, 25.
hmm But it could change. What is the cost approach method? Okay, so who here has seen an appraisal report? Everybody should be raising their hand, right? In the appraisal report, besides what's the typical method when you deal with houses? What is the method where you do comp 1, comp 2, comp 3? Same house in the same neighborhood.
Market value, the comparable.
Sales comparison. Called a sales comparison
CMA.
approach. Okay. The sales comparative approach is how we realtors also evaluate properties to come with a value. But when you buy let's say a multi-unit or a commercial building, they use a different approach. What is that called? When you buy a commercial building or a duplex or multifamily, they use a different approach. So what is that called?
Is it a
Income.
cost? Rate.
What? Income approach. Income approach. The third method, which is very hard to see, is the cost approach. So on the appraisal report, if you go back and look, you'll see sales comparison, you'll see cost approach. What's the cost per square footage to build in Santa Clara County? That's called the general cost to build. All right? The replacement costs, assuming a certain amount of labor, etc. What is the Fannie Mae hazard insurance coverage minimum? Okay. Well, this is interesting because if I refinance a client and let's say the house is worth $1 million, but they only owe $200,000, it's not fair to ask them to cover the whole $1 million. Okay. Obviously, they're stupid if they don't cover the entire amount, but if they want to, that's fine. If I'm lending them money, Fannie Mae, I'm only going to require the loan balance, or replacement cost.
Replacement cost.
Yeah. Okay, not necessarily the entire value. Okay. All right. Another quick math question. Borrowers are buying a $100,000 house. Seller agrees to credit 3% of the closing costs, but the closing costs are $3,500. That's $500 more, right? So how much can be credited?
3,000.
The answer is $3,000. Okay, because the seller agreed only to cover up 3%.
3%.
Okay. Now there could be another question that's similar. What is the Fannie Mae limit on the number of on the credit? Anyone know? What's the Fannie Mae limit? The answer is 6%. So if you credit more than that, yeah, it's it's kind of funny, but 6% is the Fannie Mae limit. What's the purpose of Fannie Mae? And what's another name for Fannie Mae? What do they call Fannie Mae, Freddie Mac? Anybody know?
Federal National Mortgage Association.
That's the acronym that stands for. But we're talking about what are they categorized?
They are the secondary market. They buy loans from the banks.
So they create a secondary market.
Mortgages.
They purchase loans. Correct. What's another name for them though?
Wholesale.
The answer is government-sponsored enterprise, GSE. So if you see in the news, it says GSE. The GSE is Fannie Mae and Freddie Mac. Okay.
GSC?
GSE.
A GSE. What is that?
Government-sponsored enterprise. Sometimes they call it Fannie and Freddie Mac conservatorship.
Enterprise.
Enterprise.
What is the purpose of title insurance? Now, if you didn't see this, you might think provide a change of title. Why is this not correct? Think of your preliminary title report. Does it tell you every single person that's ever owned this property? No, it only tells you who is on record right now. Who's on record right now, what liens there are. It does not provide you with a chain of title. But on the very back page, the page that us agents throw away, what do you see? It's in fine print. Before the wiring instructions. You see an insurance policy. It says, we cover this, we make this exception. Nobody ever reads it, but it's in there. Next time you look at a prelim, it's a little tiny print. So what title insurance does is it provides a guarantee against liens. Okay? My first transaction, unhappy ex-wife, not mine, but unhappy ex-wife, none of the agents in my office would touch this deal. They basically, the brother is on title, the brother has an ex-wife, owed child support $23,000. The sister really owns the house, put the down payment in there, she just used her brother to co-sign. Ex-wife of the brother found out, oh my god, they're selling the house, puts a lien against the property, $23,000 lien. None of the insurance companies would insure except I kept calling. Alliance Title Company, which is out of business now, not because of me, but Alliance Title Company would insure it. And they said, okay, we'll insure it, but we're going to take the $23,000 and put it aside for dispute. Okay, so that was my first deal. It was a hard deal. None of the agents in my office knew how to close it because of the ex-wife lien. So I closed it, and I learned that all title insurance companies are not the same. Some of them have different policies. So title insurance is an insurance against liens, okay? Against unpaid contractors, ex-wives, etc. All right, we talked about this before. Mortgage broker referring to another mortgage broker. Can the referring broker receive compensation? The answer is yes, but it has to be commensurate with the work done, but it also has to come from the borrower's cash to close, okay, presented on the HUD. So write that down. For example, with commercial real estate, I can actually legally put I can put a demand in, but it has to come from the borrower's own funds, and it has to be on the HUD. It cannot be hidden in agreement. All right. Last question. Last question is pre-qualified borrower. The DTI is 40%. The income is $10,000. Non-housing expenses is $1,000 a month. How much can the PITI be? Okay, so let's define the stuff. What's PITI stand for?
Principal, interest, tax, and insurance.
Does that include mortgage insurance, by the way?
No.
Well, when I do it, I include it.
That's the
And the
MIP.
PITI?
Yeah, I include it in the PITI. Here's why. It's considered a housing expense. So I put mortgage insurance in there. Now, for this ratio DTI, what does that stand for? Debt to income ratio. Okay. What is the purpose of FHA? What does FHA do?
To insure the loan.
That is 100% correct. FHA is mortgage insurance. It is not a government entity to buy loans, like people think. It's actually mortgage insurance. How do they make their money?
Yeah, how do you want that?
They don't buy loans.
They don't buy loan.
Is it very expensive to get an FHA loan?
It's from the mortgage insurance premium.
Is that
We pay for that one.
is that monthly or is that one time?
It's one time and monthly.
Correct. Correct. So you pay at closing a big giant amount, 1.75, and you pay monthly. That's how FHA makes their money. When can you get rid of the monthly, by the way?
When you
Reduce
are below
10%.
80%.
Refinance.
The answer is below 78%. You can
Oh,
refinance.
70 now?
You can refinance this market. The value might go up. It's 78% and 11 years.
And the 11
Oh,
years.
And 11 years.
Was
And
that
eleven.
78%?
Yeah. When I first taught this class, it was 5 years. It was only 5 years. You keep it for 5 years. So the best way to get rid of it really is to refinance into a conventional later.
Convention.
Refinance to
Conventional.
conventional.
Yes. All right.
So the conventional loan would, the conventional refinancing would not consider the number of years, they just know that the market went up and then the value appraised,
Yeah.
it's okay?
Yeah. You get the appraisal, you refinance it. Done deal.
For example, they bought the property for only like a year, they can do that?
Yeah. I can do it. I can do it in 6 months. With my lenders, I can do 6 months.
Yeah, but
6
I would
months?
say
Yeah.
it's very expensive now because of the insurance.
Yeah, it is.
Yeah, it's very.
So the answer is provide government method for insuring mortgages. Last question. If a loan is fraudulent, what are not typical actions? Remember that when you're on the test, the whole idea is to protect the customer. I want you to think that. So if they chose to increase the borrowed interest rate, would that protect the customer?
Increasing the power of interest, no?
No. That would not protect the customer. That's going to screw the customer. So when you take the test, you need to make sure you watch out for answers like this. Everything else, holding the broker responsible, that's going to happen. Okay, you did a bad loan, broker, you're going to own the loan. Forcing the originator to repay any premium earned, like any rebates. The loan becomes due payable. That could happen. It's acceleration clause. But increasing the borrowed interest rate, why would you increase the borrowed interest rate? That's going to harm the borrower. Okay? So that's what you have to think of. Now, our website, practicemortgagetest.com, it has a database of these questions, so you can go in and practice. Now, here's the problem. I can guarantee you the questions, but the answers, since we're not the organization, you have to look up the answers yourself. You can take it there, and if you say something, oh, I took the test, and I think it's not the right answer, you're probably going to be right. Okay? Because we don't have the bandwidth to maintain this site. So you go to practicemortgagetest.com. You click on that little button right there. Okay. You'll notice that we're not here because last time we got in trouble because not many people like that we have all the questions on here. And you'll be able to do some sample tests. So you can do some sample questions, and you can evaluate it and click on submit, and it'll email you your answers. So, but if you see like a problem, like you felt something is not right, you might want to look it up because you might be right. Okay. We only have a database of the questions, not the answers, because people don't remember it. They remember what they missed. So, but 80%, it'll help you because a lot of times something can probably tell you that some of these are on there still.
So
they haven't
they don't
changed it.
provide those manual anymore? You have to
Manual?
go to the website?
This website right here is our database of questions. So this is our database that we're providing to you. Okay, it's called practicemortgagetest.com.
Can
Right
you
here.
print them?
Yeah.
You can print it if you want.
I have questions.
There's 300 questions in here.
Oh, 500, you put down there, 500. So it's 300 or total?
I think it's like 350.
Okay.
We get new submissions all the time. All right. And if you fail, go back to the questions and try to retake the test because the chances are that you'll probably get to see the same questions.
How often you can take the exam?
Once every 30 days.
Once
Are we any way to put all the questions out? Only
No.
100, right?
Yeah. Again, this is free, so we have no resources to maintain it. But we do hope that you pass. And if you guys need anything, please feel free to take my card.
Is it for the state too? State test too?
No, we just focus on the federal.
Oh, federal.
Yeah, because
Stays easy.
because we basically felt the federal was harder. The state test is all the DRE stuff. Remember, you go online, DRE, print out the fees, figure out all that stuff.
DRE
Yeah,
goes.
so all that stuff.
So state is easy?
Well, to me it was easy as long as you know the procedure stuff.
So you have to take both, the state and federal?
You have to take both state and federal.
So if we fail for state, what should we do?
Go to the DRE website.
DRE websites, all the state things.
Uh-huh.
Oh, okay, to study those DRE.
Yeah.
Yeah.
All right.
Okay.
So thanks for coming. If you have any questions or want my business card, just grab in the front with Mary. All right. Good luck, everybody.
Thank you.
Let me know how you do.
Thank you.
Will do.